Hi, I'm Steven, the calculator guy, and today we are talking funding rates, what they are, how to use them, and how to hedge with them. So let's just dive right in. What is a funding rate? A funding rate can basically be thought of as the interest you pay on a leveraged position on a centralized exchange. Now, that's not exactly right, but it's about as simplified as it can get. And you can actually be paid the funding rate depending on whether or not the funding rate is positive or negative and if you were long or short. So this chart is a great example of how to understand that. When there's dominant long sentiment, people are generally bullish. The longs, people who are leveraged up, like leveraging Bitcoin to 10x to 20x, will have to pay the funding rate to the shorts. When the funding rate is negative, let's say the funding rate is negative, this is because there's dominant short sentiment, dominant bearish sentiment. The people with the negative leverage, people who are doing like Bitcoin 5x short or Bitcoin 10x short, will have to pay the longs. Now, why is that? Well, the basic idea is this. Perpetuals, which are these contracts that do the leverage, right? If you're trading leverage, you're using perpetuals or futures. Perpetuals need to stay as close to peg as possible, right? Like the Bitcoin 1x, right? Having Bitcoin with 1x leverage should be the exact same price as Bitcoin, but sometimes it's a little bit higher because of all the buy pressure on the positive leverage, or sometimes the Bitcoin negative 1x is a little bit lower technically than it should be because of all the buy pressure on that. So to balance that out, the longs or shorts are either incentivized or disincentivized by the funding rate. Also, there's the borrow rate, which is effectively the interest rate you pay on that, because you're always borrowing assets to leverage, right? That's how leverage works. You're borrowing assets so that you can get more price action for more bang for your buck, effectively. So you're paying interest, and then you're paying the premium. The premium is the difference between like the perpetuals price and the actual price of the asset. That's the premium, and that is due to buy and sell pressure on the asset. So anyways, what I'm saying is the funding rate will disincentivize or incentivize longs or shorts to help balance and maintain that peg. That's really it. So let's look at like a real actual example. We're going to look at Crow because I want to use Crow as an example of how I would personally hedge in the most efficient way a position on DeFi. So right now the funding rate is positive. Now, if you remember, a positive funding rate means the longs pay the shorts. So if you had a short position, if you were hedging your delta on a DeFi position by opening shorts, you're actually getting paid to do that, and that's awesome in my opinion. Now, I think the funding rate is probably going to be average negative over time, and you can sort of look at that using DeFi rate. It says that Crow is negative 0.004% in the past 30 days. This is a 30-day average. And so, perhaps KuCoin just happens to be a little more positive, but I would maybe project using that 30-day rolling average. Now, one thing you want to remember is that the funding rates that you're being paid or that you're paying all is generally in stable coins and is immediately considered a realized profit or loss for tax reasons. So let's say I have this short open and the funding settlement time has come. This is generally every 8 hours. I will be paid that funding rate. Now, how do you understand how much you're getting paid? Well, it's very simple. If you use $100 to enter a position that's, let's say, 10x, right? Then you're borrowing $1,000. $100 times 10 is $1,000. Everything in futures is borrowed. And you're using your own initial as collateral. So you're borrowing $1,000. You're paying the funding rate on that $1,000. So you would be paying you would be receiving 0.01 on that $1,000, which is pretty good. What is that, $1? No, that's 10 cents. Okay, so not amazing. You've leveraged it up, you may be getting paid more. So very simple, effectively to see what you pay. It's just what you entered the position with times the funding rate times the leverage. Now, that's how much you pay each funding rate. If you want to annualize that, you then have to multiply that by the amount of periods per day. In this case, every 8 hours would be 3 times a day, times 3, and then times 365. Now, I built a calculator to do this for us. Makes things way easier, in my opinion. So let's say the funding rate is 0.01. and the leverage is, let's say we have 3 leverage, then we're actually getting paid 32% to keep this position open short. That's really cool. If the position is that negative 0.004%, or sorry, negative 0.004%, then we're paying 13% to keep that position open. That's not that bad. So let's look at a real-world example of where we might use funding rates and the understanding of funding rates to our advantage, or to decide whether or not we should hedge our delta with perpetuals, or if we should hedge our delta with money markets. So the opportunity I'm looking at, right, is this BCRO on VVS, because BCRO is a liquid Chronos, or liquid wrapped Chronos, right? So it's effectively, I believe it's like a validator Chronos, kind of like S-AVAX or S-Phantom. So it's not seigniorage, right? It's not super volatile, maybe it might depeg dramatically. So pretty cool, pretty safe yield, you know, with quotes around it. Nothing is safe, super safe in DeFi, so if it crashes, don't blame me. But from my opinion, I like the risk of this asset. So BCRO, but I do not want exposure to CRO. I think, you know, we're bearish right now, and even if we're not, I just don't want to risk it, right? Right now, I want to be risk off and as delta neutral as possible. So we're looking at 44.47%. Okay. If you want to do all of this in DeFi, the way you're going to be doing that is through a money market or a lending platform, right? To be delta neutral, you would collateralize a stablecoin like USDC or DAI. I like to collateralize twice as much as I'm borrowing. So let's say I want to open up a $300 position in CRO. I would have to collateralize $600. So let's say I collateralize $600, borrow $300 of CRO. You know, I'm technically, I believe I'm being paid to do that just a tiny bit, but it's a negligible amount, so I'm not really going to count it. So again, my initial capital here is $600 so far, and I'm getting 44% on $300. So effectively on my initial capital, I'm getting 22%, right? I'm getting 44% on half of my capital, so 22% on my initial. Okay, cool. So that's sort of the benchmark. I can get 22% APY on whatever stables I'm using. I know that. Let's set that aside for now. How well would I do if I hedge using KuCoin, right? Or if I hedge using whatever perpetuals or futures that I have access to. You don't have to use KuCoin. I just like using it because, you know, they have KYC so that Americans can use it. So if you were to use this, let's assume this is correct just for now, 0.01%, which is amazing for shorts. 0.01%. I would use 3x leverage because that's what I'm comfortable with, which you would require 1/3 the capital to fully hedge your delta on a $300 position, right? So if you have a $300 position on BCRO, you only need $100 at 3x leverage short to cover the delta, because every $1 CRO moves down, your short position moves up $3. So if CRO moves down 1% on your $300, right, you're hit. So hard to say. Effectively, they neutralize each other. Just trust me. It's simple to model. Just my brain's not functioning properly. It's like 11:15 p.m. I've done this video like 4 times. Yeah. So period, right? 8 hours. If you're short, check this box. You are getting paid an additional 32% on that, so another $33. So you'd be getting paid $132 from the 44% on $300 per year, and you'd be getting paid $33 from your hedge. So effectively, you'd be getting paid 132 plus 33 is 165, and your initial would be 400. So your effective APY is 41.25%, and it is completely delta neutral. Not pseudo delta neutral, actually delta neutral. So I love this. This is amazing. I think these are great stable yields. Unfortunately, these vaults can't be automated because they require centralized exchanges, which require tons of licensing if you wanted to offload funds from DeFi onto CeFi and use those funds. But you can do this yourself, and I do encourage people to go out there and do the hard work to open up some of these strategies. Now, you're saying, okay, well, using leverage, is there liquidation risk? Absolutely, there is liquidation risk. So at 3x leverage, effectively, your liquidation risk is like if it goes up by 30%, you're going to get liquidated, boom. And you probably don't want that to happen. But, you know, when you open your positions, just make sure you understand what your liquidation risk might be. Maybe you want to keep some additional capital in your futures wallet, well, that additional capital should be considered as opportunity cost, right? So maybe you use that initial capital you keep in your futures wallet as part of the denominator here. Let's say you keep an extra $100 in that. So now it's a $500 cost initial. So now your effective APY is 33%. That's still really good, in my opinion, to reduce liquidation risk on your initial capital. So here, clearly, the perpetuals are better than using the money market. But if we take that 30-day average of negative 0.004 and we're paying $13, then really it would be around 119. And that would put us at 23%, which is, I don't know, still pretty good. And so I don't mind this. This is just about exactly the same as if we were using the money market. So I don't know which one's better. They're practically the same. Maybe you would use this one, maybe you use that one. At that point, it's a point of preference. But if you wanted to reduce your liquidation risk, you can also reduce the leverage and add more capital. All things that are totally up to you. Okay, so that's funding rates in a nutshell. Again, funding rates are just effectively the interest that you're paying or being paid to have perpetual leverage positions open. And if they're positive, the longs pay the shorts. If they're negative, the shorts pay the longs. That is it. Now, what do I want to talk about now? It is the Discord, the DeFi Dojo Discord. I genuinely really do think it is like the coolest Discord in DeFi, and here, I'll tell you why. The culture of that Discord is that of like respect, intelligence, and curiosity. It is probably the most civil Discord I have ever been in, and I am incredibly proud to call it like my Discord home. And you can join the free section if you want to. A lot of great conversations happen there. I hang out in the free section sometimes as well. People are always answering questions. The black belts who are like DeFi power users are often there answering questions. The mods hang out there as well. And if you go there like just to trial the Discord and really like it, then consider joining the premium Discord. It's like $20 a month, or you can pay for a year, like $204. We used to pay $204 for Ethereum gas transactions. So, you know, I think you get a ton of value out of it. We do community calls there every single week. So if you just want to hang out, listen, talk to each other, we're doing that weekly. Most of my videos are actually inspired by things we're talking about in the Discord. And like funding rates, I learned about funding rates from the people in the Discord who are oftentimes smarter than I am. So I am very privileged to have this Discord as a resource myself. So I don't know, guys. I really like it, and that's why I always try to end the videos with inviting you guys. Not even saying you have to pay for it. You can come join the free portion, and if you like it, I do recommend joining the paid portion of the Discord because, you know, it's really, really clever folk there. We're talking about cool stuff. We're not shilling anything. It's like people with varying opinions who are respectfully discussing and learning together about DeFi, crypto, investing, portfolio management, risk management, and we are definitely growing together. It's like a hive mind think tank, and I don't know. I love it, and I hope that, you know, you can tell that I'm being genuine about it because I really and, you know, I like it. So anyways, that's it, guys. If you want to join the Discord, you can either contact me directly to pay with crypto, or you can join via the Patreon link in the description. The $20 tier gets you access to the Discord. $25 tier gets you access to the Discord and my Patreon only videos. That's it. Thank you so much for watching. Genuinely, your support means the world to me. So thank you. Have a wonderful rest of your day.